Hi everyone. So today's video might be a little bit controversial because I'm going to talk about not paying your tax. If you can't pay your tax bills, you should always go talk to HMRC, try and arrange a time to pay arrangement, and also talk to your accountant about getting a bit more prior warning and also cash flow planning so you can pay them in the future. But this video is quite relevant right now because there's a lot of businesses under pressure when it comes to cash and when it comes to tax. And what I want to do is just talk about an absolute emergency scenario where you can't necessarily pay tax bills. And the whole point of this video is when you can't afford to pay tax bills, sometimes you have to prioritize which tax bills you pay first. So this video is about prioritizing which tax bills you pay first. So really, for most businesses, there's really going to be about 4 types of tax involved. There's your personal tax as a director, if you're taking dividends as a shareholder as well. There's a corporation tax on the profits your business makes, company makes. There is your VAT, and there is your PAYE. So these are the 4 main taxes that affect businesses. Sometimes there's things like CIS involved as well, but that doesn't necessarily impact your cash flow straight away. But I'm going to do another video on how that does impact your cash flow, but it'll just be separate. So the one tax you should always pay first is pay your personal tax bills, because ultimately, if you fall behind with your self-assessment tax, that is the tax that is held against your personal name. That is the tax you not paying will get you really bad credit. It could even make you bankrupt in some circumstances. And actually, self-assessment is also one of those taxes where you get penalties for not paying it. I'll cover this in the rest of the video as well, but there's taxes where you get penalties for not paying, and there's other taxes where you don't get penalties for not paying, you just get interest. Self-assessment, you get a penalty for not submitting your tax work, and you get a penalty for not paying it, and it impacts your personal credit, so definitely pay that first. The second tax you should always pay after you paid your self-assessment is your VAT, because your VAT is one of those taxes where you get a penalty for not submitting, you get a penalty for not paying it, and HMRC have a super aggressive enforcement team as well. If you're going to prioritize what order to pay your taxes in, do that next. So then you go on to corporation tax and PAYE. I'd say in terms of priority for payment, they're about equal. Typically, your PAYE is due sooner, so you might want to pay that next because it means you'll get a bit more leeway with HMRC not chasing you that whole time. But corporation tax and PAYE do get a penalty for not submitting the tax work or the returns, but you don't get a penalty for paying late. You just get charged the HMRC rate of interest, which I believe at the moment is about 8% APR. You also get charged that on top of the penalties for the other 2 taxes I mentioned earlier, which if you didn't pay them. But I'm going to summarize this video with a quick, okay, if you had to prioritize which tax to pay, do your own personal taxes first, then do your VAT, and then do your PAYE, and then if you've got money left, pay your corporation tax. And that's my reasoning behind it. But as I said in the beginning of the video, the most important thing is if you can't pay your taxes, talk to HMRC and get a payment plan, and also talk to your accountant and get your cash flows sorted. Like we do with our clients, we use a bit of software called Float. We create the 36-month cash flow plan, and they can see exactly when they have money, when they don't, and we can manage the timing so everything gets paid. So thanks for watching.